Now today, July 1, the start of the new financial year, of course, and it's the perfect time to turn over a new financial leaf. There are so many changes afoot, aren't there?
I'm sure I tell myself to turn over a new financial leaf every year. But anyway, you may have missed out on being able to claim deductions in the past, but today is the day to start keeping proper receipts. That's what I always promise myself, and records for the year ahead. We'll hear with her advice and tips. We're talking now with Suzanne Haddan, Managing Director of BFG Financial Services. Suzanne, how are you doing?
Good morning to both of you.
The first tip is head back a year in time and keep all your receipts and do all your bookkeeping. But
yeah, are we still doing it in the shoebox? Is that how it works?
Yeah.
We get a bit nervous with the shoebox kind. We want to sort of start you off with a positive way to handle your receipts this year. And the first tip I've got is to go to the ATO website and download the app called My Deductions.
I've heard about this app. Is it good?
Well, it has a nice ring to it, doesn't it?
Yeah.
My Deductions. It's not the most highly rated app on the Apple network, but it still serves a purpose. It enables you to have more confidence when you get to the end of the year that you're not going to be under the increasing scrutiny of the ATO when you come to claim your deductions.
All right, well, let's start with the good news. Today, as of today, July 1, this new rebate for people earning up to $125,000.
There are some great increases in tax. Bear in mind the first rebate you won't actually receive till you submit your 2019 tax return. So a little way to wait for that one. The increase in the threshold from 87,000 to 90 will give you a little bit of an increase in your after-tax income, but nothing to get too excited about.
Okay, this financial year, the ATO says it's going to focus on work-related expenses. What does that mean for us?
Okay, so they're concerned that apparently half the workers need to claim laundry expenses for uniforms, so that's going to be a focus. But what it means is you've got to follow their 3 golden rules. You need to have paid the expense and not been reimbursed. It needs to relate to your income, and you need to be able to prove it. Now, proving it generally means having a receipt. And the problem with Andrew's point about having a shoebox is sometimes you can't find them at the end of the year. So during the year, use the app and you take photos of them to have them deductible.
What about that $300 limit thing? Is that an automatic deduction? What happens there?
Well, there's the first problem. The $300 limit that the ATO put out was to say that if you had those valid deductions, they weren't going to ask you to provide receipts. But you have to be able to show that you did incur the expense. It's not an automatic deduction. It was just the limit that you didn't have to have as robust receipt keeping. And there's the problem.
Another contentious issue as far as making those deductions are concerned is working from home, the home office and what you can claim. How do you work that out?
Well, you've got to look at, first of all, the area of your home office, and you have to do it proportionally between what you use it for your heaven forbid gaming versus what you do for your work and what your children might use.
But there's no way of actually proving that, is there?
Well, they can test about your job and the likely percentages that will apply to your occupation. So tax office is getting very sophisticated with their data matching, cross-referencing. Do you claim deductions way out of the average for your occupation? So yes, there are ways that they can certainly draw attention to you.
And the first point of call is, of course, to claim that money back from your employer, because you can get a much better return, don't you?
Absolutely. We keep talking about deductions. I want viewers to focus on reimbursement. When you claim from your employer, you actually get 100% of the money back. When you claim on your tax return, you only get a percentage based on what tax you pay. So 100% versus 34.5 for the average worker. I know which one I prefer.
All right, let's move to super. It's a huge area to cover. We'll do our best. You're going to split this into 3 categories as far as workers are concerned.
Yes.
Young workers or low-income workers. We'll start with that.
Right. First, for young workers, what I want to see them do is small amounts regularly. So say $20 a week when you get your first job. You put it into your super, meet the requirements, you can get $10 from the government, so 50% return. But to get the attention of the young people, parents might be able to highlight that their contributions plus interest will be able to be withdrawn under the new First Home Super Saver scheme. First withdrawal start today. And that would also help parents because it'll be less drain on the bank of mum and dad.
Yeah, that's right, absolutely. Well, what about average income earners?
Here I want to highlight the value of salary sacrificing. What does it add to you? In broad terms, you give up $100 cash $100 of your income, you give up $65 cash to get $85 into your super. That's a 30% extra savings ability. Plus, if you're not saving for retirement and you're saving for first home, again, you can still withdraw it.
The key is it's all before tax, of course, so you're lowering your income.
Exactly. To get money into super before tax, you pay 15% versus the average worker 34.5%.
And
I've got to say, of course, beyond that, you're looking at retirement, which is what super is all about.
Well, the one for people who are already retired, again, starts today, is the super downsizers contribution. And what that is, over 65, owned your home for 10 years, you sell it, you can actually contribute to super. And some people have been saying to me, well, I don't want to put any more in super. Might be better to put some of that money in super and take other money out of super. You could save your estate potentially $17,000 in tax for every $100,000 of super.
What about those few people who have invested in cryptocurrencies? What should they be keeping in mind this tax time?
Now, here's one we get bulletins on all the time. My best tip for you, because you know a lot of the cryptocurrencies have lost value in recent times, don't be trying to claim a loss if you haven't been declaring the profit in the past, because that's going to be the first. It's a trap. And don't assume, even if you're not using the money for investing, cryptocurrencies can still be subject to tax on profits, even if you're using them for a personal use asset.
Not dissimilar if we're talking about the new economy, Airbnb and the like, of renting your house out, or at least sharing your house as such, what you need to declare.
Now, it's absolutely crucial that you declare the income, and again, use the app, ATO app, to keep a record of deductions. But don't forget that it's based on deductions are based on a proportion of the floor space that you've rented out. And also, I've spoken about this before, you need to keep records of all expenses, because it can affect not only income but capital gains tax down the track, which is a big
Suzanne,
risk.
great tips there. Thanks so much for that.
Thanks for having me.